Good morning. It's Jeffrey Cohen. Friday, May 27th. Hopefully you're doing well. The purpose of this video, talk a little bit about pre-market, just a touch about U.S. financial markets, talk a little bit about fixed income, where we're at, but then I want to jump right into our model output. We ran the Chicago Quantum Net Score up and down run last night. I've got them right here. And I'm going to walk through them with you. And I'm going to walk through also, just to give you a little teaser, the spreadsheet that we put together that we would provide to every client. And this is the up run, so it has all the stocks in order. And it has all this other financial information about the companies. And so I'll show you how you might want to use that. And, you know, again, we'll start just real briefly with the markets where we're at. And so I also want to do a shout out to Shinobi, Japanese analytics firm that works in the defense industry. Real hats off to them. Good guys. So we got the chat live. So come on in and leave a chat and we'll respond to it. So it may just take me a minute to see it. So we'll start off. The spider, the S&P 500 index is up. This thing was below 400, which was a pretty important psychological number. Or level. We're at 408 right now. The QQQ 300, very important level. We're over 300. We're at 302. So I just look at this and say, markets look pretty good. 408, 302. Kind of keep your eye on it. And I think we're fine. I think the market's probably going to go up again today. I haven't even looked at the futures, but just a generally good feeling out there, right? And there were a couple of things that popped to my mind. So first thing, maybe just take a minute, right? The markets yesterday just all went up. So this is FinViz. This is the S&P 500. The bigger the circle, the more valuable the company. So you can see the big ones here. Apple, Microsoft, Alphabet, or Google as you might know it, Amazon, Tesla, Coca-Cola, right? Berkshire Hathaway. Somewhere in there, there's Verizon. And you can see that most stocks went up. They were led by an outsourcer, DXC, which was an acquisition. It was a mashup of CSC, Computer Science Corporation, EDS, and whatever they've bought recently. They just do outsourcing and offshoring. Then you got Dollar Tree and Dollar General leading the charge, which is odd to me because you would think that a strong economy, right, would be driven by companies that are, you know, fancy, tech, digital, whatever. Just this $1.25 store, right? The one that went down the most was Kraft Heinz Company, and honestly, we're going to take a quick look at that later on, not on the video, but I'm writing it down. Because why would it drop 7%? It doesn't make sense. But you can see generally it was a melt up. Everything went up, pretty much. It's an exciting day in the markets, right? You could see this is the full view. Again, thank you, FinViz. Very few red stocks. You can see there's your Kraft Heinz. There's Snowflake. There's Canadian Imperial Bank of Commerce. There's National Grid, which is a foreign company. But most of the stocks were up, right? Medtronic, again, foreign company. So we've taken foreign companies out of our run, just so you know. All the companies, as far as we could tell, are domiciled, incorporated in the United States. We do have to throw out some babies with bathwater, so Accenture's out because they incorporated overseas. They're no longer a U.S. company, so they're out. Very green yesterday. Wow. Let's take a look at fixed income because it's not all about stocks anymore. It's also about bonds. By the way, bonds are not dusty and old for old people. Bonds are good for anyone who saves. Okay. So one thing just to point out, we are less than a 3-to-1 low to high ratio. And that's just amazing. Okay. Investment grade, 1.5-to-1 low to high ratio. What this means is we're no longer in the mode of pounding lower bonds. We're not driving up bankruptcy risk for companies that might have too much leverage. It's still a pretty high ratio, 192 to 23 in the high yield, but that's fine, right? It's that you'd expect it's high yield. But overall, you've got 3.5 advancers for every declining bond yesterday. So fixed income did well. It is so interesting. I'm so fascinated by that, right? I want to point this out because this is your government Treasury market. And, you read a lot about inflation and the Fed and what they're doing. So the Fed only controls, realistically, overnight rates. All the rest of these Treasury rates are handled by Mr. and Mrs. Market, okay? So 30-year Treasuries are at 299. That's high. That's actually gone up. 10-year at 2.75 is about the same. What's interesting is the 1 month. I think if you go back to yesterday's video, that number was 0.56, I think. It's now 0.71. That means risk-free. Give your money to the government for 1 month, okay? And they're going to pay you an annual yield of 0.71%. Just to put that in perspective, when you take your money as a bank and you put it in the overnight reverse repo market, you get 8 basis points. So if you're a bank that has nothing to do with the money overnight, you're getting 0.08. Here you get 0.71. So if you're willing to tie up your money for a whole month, all month, right? You're getting like 8 times the yield, 9 times the yield. It's just interesting to point that out because different operations, different workings, right? So we're going to take a look and see if we can see any of that kind of curve at the end. See how it's going down? So the yields are coming down. I don't know if this chart's been updated, actually. It's interesting. This is the 10-year. Let's look at the 5-year. Let's see if you see it. It still looks like it's coming down. That's fine. It's just not a nice visual. But so it's important to point that out. So rates are starting to rise while the stock market goes up. Now I'm going to show you some crown jewels here. This was the current efficient portfolio yesterday. So the S&P 500 went up about 2%. DDS, NVDA, SI, SITM, TTD, they all went up way more than 2%. In fact, you see it. The median rise there is 5.16. So you're supposed to hold these 5 stocks. If you were to have bought our run 2 nights ago, got the stuff, bought at the open, sold at the close, you'd have made 2.5 times the S&P 500 rise. There's a slightly larger version of this run where we basically threw in the kitchen sink. This portfolio is much larger, but it still had the same edge over the S&P 500. So what happens is we're running very, very deep solvers, very deep analytics, heuristic as well as QBOs. I think we still have the particle swarm optimizer working, the simulated bifurcator, the simulated annealer, as well as your Monte Carlo, your fat tail Monte Carlo, and your genetic algorithms, all running against the stock data for like 6 hours. By the way, it hits equilibrium after like 3 hours. We don't have to run it for 6, but we've been trying to find that next edge, right? So you look at this median, and if you would have invested in, looks like 12 stocks, you would have been right around 5.08. So it's close. So the median for these stocks was roughly the same as the median for the smaller portfolio. So I'm looking at this and I'm thinking, why isn't everyone and their brother buying our model, buying our run? Because they don't know about it. So that's why I made the video. So I ran today's runs, and yeah, we're setting up our kind of official Schwab account as a registered investment advisor so that we could, not have it like our personal investments, right? So we have money, we can manage money for ourselves, we can manage money for other accounts, and that's going to be great. We're going to work with Schwab. I got a bunch of paperwork I'm doing. They keep calling and saying, hey, we want to train you and get you set up, but until I have some real money to put in there, I'm not 100% sure I want to rush. But this is up through the roof. So we have our new runs for today, okay? I promised I'd give you something good. So these are the 5 stocks today. Dillard's, DDS, Melli, Mercado Libre, MXL, Max Linear, NVIDIA, NVDA, and Silvergate Capital. They lend to Bitcoin investment firm, Bitcoin miners and stuff. And so, I mean, they did great yesterday. The larger portfolio, because not everyone wants to invest in just 5 stocks. So the edge is still pretty good. It's over 5 in this market compared to the S&P 500. So ACLS, Axcelis Technologies, Coinbase, Global, Coin. Again, you see Dillard's, LSCC, Lattice Semiconductor, relatively small cap semiconductor firm. Melli, again, Mercado Libre, MXL, Max Linear, NVIDIA, NVDA, B. Riley Financial. I love it. Stock promoters. RILY. Surgery Partners, SGRY. I don't really know what they do. Stock's actually been dropping. I wonder if it's in the list because it applies some downward pressure. I'm not sure. Silvergate, SI, SITM, SITime Corporation. They make the timing for the computers. And the trade desk, TTD. I finally figured out what they do. They're not like Robinhood. They sell advertisements. Because I noticed, because I have an ad blocker, and sometimes you get a little bit, like if you click on an ad to turn it off. I've been getting a lot of provocative ads lately. Women in bikinis and stuff, and I don't like it, so I click them off, because, I don't know, I have a daughter. I don't want all that weird stuff. So, and when I click it off, it says, oh, brought to you by the trade desk. So I realize that's who's selling the advertising. So I just gave you the pick, right? So what are you going to do with it? So now let's talk about what you get when you actually buy the run. I actually wrote a white paper, and I've been cleaning up this run. This is still a little bit dirty, but what used to happen is I wrote up a whole report for everybody. And I had somebody say to me, Jeff, I don't need your damn report, right? Just give me the answers, okay? So basically it says, look, we started it at 8 o'clock last night. We do that to give our market data services provider a chance to get the data out there. By the way, I got the chat up. Just go ahead, ask me anything. I don't care. Ask about a stock. Ask about the model. Ask about my cat. My cat's outside in the rain, actually. It's just kind of weird. It's not raining, but it's going to. So it starts off and we look at what are the levels of the 3 main exchanges, QQQ, IWM, and SPY. So a year ago, the SPY was at 413. Yesterday it closed at 405. It's trading at 408. That's up almost a full percent. Just to show you, right? The IWM was the QQQ, the NASDAQ was at 332. Closed last night at 299. It's at 302. That's up 1%. My guess is if I were to look at the futures, they'd be up like 1%. I'm not going to, but I'm betting they would be. If you look at the overall market returns, you can see where our market return is only 4%. We go through the stocks. We have a capitalization level. We brought it way down, $25 million. So stocks of $25 million and up are going to be in the model. We have a high price and a low price limit. Any stock that trades over $10,000 a share or under 30 or closes under 35 cents a share is out of the model. It's considered a penny stock, or it's probably an anomaly. Minimum volume is 1,000 shares a day. And these are stocks that have some issue, right? When we pull the data from our market data provider, we're testing market cap at 25 million. These stocks don't have a market cap. A lot of them are foreign. Now, Puerto Rico's not foreign, but Puerto Rico, Israel, Canada, UK, Ireland, so they don't show up. So It's just different, right? So I can look at that and I can see, so what's going on there. We also do another quick check and we check our stocks against what country they're from. Because again, we're really looking, and what's interesting is, so this is a stock that looks like it's based in the Netherlands, Cure, but it's showing up without a home in our market data provider. Georgia, I looked at a couple of those. That was actually the state of Georgia. I didn't realize that was a country anymore. I mean, it is a country of Georgia, but I was looking. It's not. And then you do get some errors, but that's okay, right? Because it runs through. We still have 2018 stocks that passed full data validation. I love it. And these stocks vary from an annual return of 1% to 14%. Tell me if you're getting bored, because this is our model, and I love sharing it with you. So the expected return of all 2,118 stocks is 4.74%. Now, these are stocks that have a positive net income and a positive cash flow from operations in the past year. Their variance is 1,392. So when we look before at the variance of the S&P 500, it was like 1.2. This is closer to 1.4. And that's okay, right? That's a little higher variance because you're holding these stocks equally. It's not market capitalization weighted. So these are the best stocks in our model. So just to show you how it works, the model is basically set to 0. Now, it's not an arbitrary set to 0. It's actually set to 5.42 times 10 to the negative 20. So we calibrate so that a score of 5.4 times 10 to the negative 20, or 0, is all the stocks held together. So if you held every stock together equally, 2,140 profitable stocks that had positive cash flow, your risk equals your return. Okay. So now I'm thinking, risk versus return. It's actually risk minus return, because quantum computers can't divide. So risk minus return set equal with a CQNS power of 2.91. What that means is we don't have to adjust very much. Risk and return are almost equal anyway, right? But I've had that number as high as 10 or 12, right? Where just returns were through the roof. Remember when the market kept going up? Well, now it's a lot more important to reduce the risk of your portfolio while still maintaining your returns. So here, let me show you. So Amphenol is the stock that, within rounding error of 1/10,000th, has the same score as the S&P 500. The S&P 500 actually does better. It's fascinating. It does better, right? NVIDIA is the best performing stock, 15 ticks above the market. So remember that. NVIDIA, Lattice Semiconductor. What you're going to say is, Jeff, I don't understand. NVIDIA and Lattice Semiconductor, well, they're actually showing up in our best picks. I want to show you the best picks again, just to remind you, because I think it's really important, right? I'm giving you the picks that you should buy today before the market opens. And then you're going to know that I gave you winning portfolios, right? So if you look, LSCC is in the picks with NVIDIA. So this is the larger portfolio. So again, Trade Desk, SI Time, Silvergate, Surgery Partners, B. Riley, NVIDIA, Max Linear, Mercado Libre, Dillard's, Coinbase, and Axelis Technologies. These are the ones that you would hold equally. So 8% in each. If you like a smaller portfolio with the same edge, LSCC falls out. You have NVIDIA, you have Silvergate, you have Max Linear, Mercado Libre, and Dillard's. Now, I'm not saying individually these stocks are any good. I'm not saying fundamentally they're valuable. I'm saying that held together, they have an edge over the market. So, Jeffrey, what kind of edge, right? I could just buy NVIDIA and be 0.00015. That sure looks good to me. I could just buy Spider and get 0.0004 I wrap this whole thing up. I don't need your stinking model for $750, by the way. I could get the whole thing. So here, just to show you some other stuff. The worst stocks that made a profit. The Tile Shop, Troops, Biora, Forge Global Holdings was a blown out meme stock. Urban One opened up a politically assigned casino. BTU, Peabody Energy, also got blown out. So these are stocks that are costs. There's a meme stock from the old days, right? Like Run DMC kind of days, right? So those are the ones that they make a profit. They're fine. They just have so much risk versus return. And remember, zero, this one's at 0.02 to the positive. So these are the stocks with the smallest volume. So Troops is a bad stock, but it doesn't trade. It doesn't trade really at all. It's 0.6% of last year's average volume. So it looks like it memed out last year, and now it's just flat. No one's really trading it. And then there's, of course, your banks. A lot of banks won't trade very much. So, but that's interesting, right? Largest volume, NVMI. My guess is if I look at NVMI, it traded at 1,225% of last year's average volume. NVMI. And then you got SIGA Technologies. I never heard of either of these, but they traded like crazy yesterday. This one, zero. This one's traded 400,000 shares already. 400,000 shares already. Hilltop, HTH. So NVMI just isn't trading pre-market. HTH, none. PCSB, none. WVVI. I'm doing this because I want to show you could find the memes the night before. ADC, nope. I mean, VMware we know is going to be active because of the acquisition. Yeah. So it's funny, right? MSP, I don't know. So we'll go back to SPY in this one. So SIGA is high volume yesterday, second highest volume compared to last year. And you can see today it's at 10.5, right? It's trading like crazy. Oh yeah, Kraft Heinz was 383% of last year's average volume. But it's not really trading. So we found potentially a meme or an active stock this morning. That's great. These are the stocks that fell the most. These are the stocks that went up the most last year. Now let's start looking. So what's interesting is these are the different solvers that we used. Here's the interim solutions. We hold all the interim solutions. So what happens is we're running through, and I'm sorry, Pump. All right, fine, I'll get them. Excuse me. All right, Cat Cameo. All right. Cat Cameo. This is why I had to get up. He was outside. He's getting a little wet out there. So each one of these genetic algorithm runs, think of it as like another iteration of the virus, right? But this is another iteration of your stock portfolios. And sometimes you're running generations. Like in this case, you had to run from 197 to 223 generations to find a stock portfolio that was better. And then you run that, and then you run that, and then at some point, look at that, 5257, 5263, and there, it froze out. So this was your best portfolio, and this is the 5-stock portfolio. So you go through, it's boring. Boring. Jeffrey, you're so boring. So, positive skew stocks. Some people like that. Negative skew stocks, right? Look at those values. You could have a stock with a 12.2 positive skew and a minus 11 negative skew. So we don't work, our clients today don't work with skew stocks, but you could. You could say, Jeffrey, give me the 5 highest positive and negative skew stocks. I have a hunch. Leptokurtic and low variance. Leptokurtic and not quite so low variance. Just if you want more. But this is where like a Verizon shows up. Pepsi, Procter & Gamble, Public Utility of New Mexico, Mondelez, Coke, and a couple others. William Penn. So imagine if these have options. Okay? Jeffrey, I'm going to go buy some options on Pepsi because I want to be part of the new generation. Well, my guess is Pepsi isn't moving much for a year. The moves aren't that large from a standard deviation, two standard deviation perspective. My guess is the same thing with Verizon. You know, we were trading Verizon at 50, 48, 52. It doesn't move. It doesn't move. Never moves. That's the point. You can find stocks that don't move. When they do move, the options get blown out. You either make or lose a ton of money. Love that. Then you have platykurtic and low variance. Platykurtic and high variance. So these, it's like BTU. We already talked about BTU. It was a blown out stock, right? With huge price gains, huge price losses, lots of volume. But then you have, so BTU, by the way, makes, it's Peabody Energy. It makes coal. You have LPI, right? Laredo Petroleum. CPE. Callan Petroleum. PBF, another petroleum company. Right? So these guys move crazy. That's the point. APPS. That's not, I don't know if that's a meme stock, but that's a crazy stock, right? And so these just move all over the place. From a standard deviation perspective, there almost is no standard deviation. They're just anywhere. They're not at all random. So you might like that, right? So here's your picks. And this is 0005. So what's interesting is if you looked at the S&P, it was 0004. So that's not a very large edge from a risk-return perspective over the S&P 500. That is so odd. Let me double-check that. So 0005 negative versus, where was my S&P? I wrote it down, but I just want to make sure. And you would want to make sure too. If you ran it, you want to quantify that edge. I mean, there's plenty of crap stocks that you could have bought that have terrible Chicago Quantum Next scores. So this could just be a chance. Oh, these are... No. I'm so sorry. Look at that. The S&P 500 has 4 zeros and a 4. That's 4.0 or 4 point something times 10 to the negative fifth. NVIDIA is 15 or 1.5 times 10 to the negative 4. It's almost an order of magnitude better. All right, now I get it. So your edge on the market is 5 times 10 to the negative 4. It is a full order of magnitude. It is 10 times, 10 times the edge of the market. Wow. That's awesome. All right. There's really an edge. I got it. So my guess is those stocks are, if the market goes up today, you want to be in those stocks. If I'm a risky guy, I want to be putting money to work. If I got 100 grand and I can make an extra 2 or 3% in a day, I'm buying a new car in a month. Now, when you lose big too, right? So you've got to find a way to hedge against market declines. And that's what one of my clients was telling me about. So these are all the stocks that get picked. This is the whole 2180, right? And so, and you get a spreadsheet for that too. I haven't even walked through your spreadsheet yet. So I'm going to go back. I'm going to go back because I want to, first off, I want you to know what you're getting here. I want you to get some insight. But I want you to know the stocks that we picked. I want you to have it. I want you to have it in your pocket. Jeff, I might make money today. Thank you for the pick, right? Let's take a look at pre-market. Pre-market, those 5 stocks are all up. This is the smaller version. The larger version, they're either up or they're flat. This is a solid, basically it's a solid pick. It's so fascinating. So my guess is the market's up today, because that wouldn't happen normally. You also get stocks that paid 5% or more dividends in the last year against actual stock price. So LPG, Dorian LPG, paid 41% of its trading price last year in dividends. Now, QRTEA paid 16%. Now, you can look back and say, were they paying a 16% yield? No. But the dividends they actually paid, if you held the stock for the full year, were worth 16% of the average closing price, adjusted for dividends, for the year. That's a lot of dividends they paid last year. USAC, USA Compression Partners, they actually have compression hardware, equipment that they provide oil and gas, E&P, paid out 14%. So if you would have held the stock for a year, you would have gotten 14% on your average amount of money that was invested. That's great. AT&T paid 8% on last year's average price. Altria, tobacco company, paid 7%. That's good money. That's really good money. As stocks go down, dividends go up. In the past. Can they pay it moving forward? Not sure. Again, the spider variance is 1.27 times 10 to the negative 4. That compared to like a 1.35 times 10 to the negative 4. So it's slightly better. But it means it's going to pay a slightly less return than the stocks picked. So these are your negative beta stocks. So Jeffrey, negative beta, I'm going to make a ton of money because if the market goes down, these go up. No, I wouldn't think of it that way. In these cases, I would think of Union Bank shares doesn't trade much. So when somebody wakes up, scratches their head and says, oh, I'm going to buy Union Bank shares, or ESSA Bank Corp, or Nicolette Bank shares, or Nicholas Financial, or StratSec Security Corp, then they're not really looking at what the market did that day. They just made a buy or they made a sell based on some information. Now, Fathom was memed. I don't know if it's still memed. It's a small manufacturer. It's a roll-up of digital printers out near where we live, actually. I could probably stop by the office, right? And that's showing a negative 12% beta, but I think that's because they just got memed. They just got traded in an anomalous manner. Here's stocks. I have to fix the titling. These are the stocks with the lowest beta. There's 100 of them. So if you wanted to keep your money somewhat safe, you got very nice banks. You got a gold miner. They just don't trade with the market. They trade with their own, right? Here's the stocks with the highest beta. They really do trade with the market. You really want to be in these stocks, either long or short, because they got a lot of volatility. They got a lot of movement. But you want to be careful because you could have picked Grow Generation and lost all your money. Or Lending Corp is somewhat risky. Coinbase is down, but what's interesting is Coinbase fell while the market fell. Coinbase seems to be going up when the market goes up. It could just be a leverage bet. Might have not a lot to do with Coinbase. These are stocks that rose in price really fast. Multiples of E. So SMLR, Semler Scientific, rose about 280%. Tile Shop Holdings rose, it had to have been memed, about 6 times. 6 times. View fell about 35% in one day. That's a lot, right? These are stocks with volume spikes. So I looked. Why are all these banks having volume spikes? Because there was a day, June 21, I ended up tweeting this and nobody responded. On June 21, somebody or some group of people went and traded millions of shares of these banks. June 21, 2021, what happened? I don't know, But somebody went nuts and traded a ton of little community banks. By the way, I'm learning a lot about community banks, just so you know. I can't really tell you what I'm doing with community banks, not until I really know, but I'm doing a lot of research on community banks. And then here are the stocks that split. And so this is what you get. Now let's take a look at that spreadsheet. Jeffrey, don't I get a spreadsheet? Yes. By the way, SIGA is trading like crazy. It's still at 1050. What's going on? All right. Hopefully the sound is good. If you don't like the sound in our videos, do me a favor and just tell us. Drop a comment. So you know what, Jeff? So I did something with the microphone and I did something with the sound in the house to make it better. Hopefully you like the sound today. I worked really hard on it. So let's, yeah, good. I locked everything. So I'm going to make this bigger. I just want you to see. So there's NVIDIA. So it's interesting. It is interesting. This CQNS score is slightly different than the one that we saw in the thing there. I got to check why that is. This also could be from a different day. So I'm not going to worry about it. It just happened to be what I pulled up. So NVIDIA has a CQNS score, has an expected return of 10%. The average daily volume yesterday was double. It was 219% of last year's average volume. So people are trading NVIDIA. It trades at 77% of last year's average. So it's down 23% over last year. The variance, it's just a comparable. Last year it paid a 0.12% dividend. It's got a $452.5 billion market cap. You'll notice Microsoft, Apple, and Google are out there with Broadcom. So the large market caps are showing up in force in our model. And that's important because you would look at our model and you would say, okay, why are the large market cap stocks being chosen by the model? There's Berkshire Hathaway. There's McDonald's. Texas Instruments. They're not that much large cap. PepsiCo. Johnson & Johnson. Coca-Cola. Verizon. So, what do you remember about those stocks? Come on, think. Think. You know. Leptokurtic. Pepsi. Verizon. Procter & Gamble. Some of those are showing up. Mondelez. Some of those are showing up because they're leptokurtic, because they are really, really attractive from a risk perspective. Others are showing up because they have relatively flat expected returns. But they also have, relatively speaking, low variance. Look at Alphabet. 006, 005 versus NVIDIA at 03. So it is an order of magnitude less risky than NVIDIA, but the expected return isn't that bad. So what's happening is Microsoft, Apple, these stocks still maintain an above average expected return because of their beta score, but the risk has fallen. So when I think about a stock like Microsoft, Apple, Alphabet, I think of a slope. Stocks went up and they flattened. And as they flatten, there's not much going on. So that's where we're at. You also see cash flow from operations of these companies, their long-term debt, their net income, their common equity, which is very useful, by the way, in analyzing banks. AOCI, this is accumulated other cumulative income. This is the income that doesn't show up in the net income, but it's there. It's mark-to-market kind of stuff. Short-term investments, long-term investments that companies might hold on their balance sheets, and intangible assets. So if you're analyzing a company, these start to feel like the things that you might care about. Okay? You might want to compare things like how much money did you make? How much cash flow? How much net income versus your market capitalization? You may want to look at asset valuations, common equity versus intangibles, and versus AOCI. By the way, I'm giving you some clues here on some of the work that we're doing. That's interesting to us. That's a way to find edge on a fundamental basis. So, last but not least, I'm going to leave you with where are we with the stocks that we were looking at? Where's our stock picks, right? Because let's see how they end up just before the market opens in 3 minutes. So, these are the stocks that we picked for today with our model. This is the larger portfolio. This has an edge of roughly 5 times the market. You can see it's all up pre-market. So if you would have gotten this run the night before, maybe you could have bought before the pre-market went up. Or maybe you just buy it at the open. Who knows? So these are those companies. And then we have a smaller version of it with the same edge for those who maybe want to trade fewer shares. And you see here you go. Silvergate, NVIDIA, Max Linear, Mercado Libre, and Dillard's. Average, or the median up is 2.33. You would hold these equally. So I want to thank you very much for listening. If you like the video, we don't get paid for doing this, by the way. Hit the subscribe button, please. It really helps us. It tells us you care, that you're watching. It also tells YouTube that you care, and it then promotes our videos to others so that we can spread the word. And drop a comment. The sound quality, hey, what about that stock? I didn't like this. It's too complicated. Or can you explain something? Or hey, here's a question, whatever. Drop a comment. Or even just, hey, Jeff, thanks so much. It was really helpful. And we'll keep going with these videos. You take care now. Good luck in the market. Bye-bye.